Do you ever feel overwhelmed trying to figure out the absolute best way to invest your IRA funds on a platform like M1 Finance? I get it. When I first started setting up my retirement accounts on M1, all the options, Roth, traditional, SEP, plus the custom Pi feature, made my head spin. But after years of using the platform, I've narrowed down the best, simplest, and most effective strategies that leverage M1's unique strengths for a hands-off, long-term IRA. I'm going to walk you through my personal favorite strategies, focusing on how to use M1's Pis and automation to build a powerful retirement portfolio. Lightbulb Roth versus traditional, choosing your IRA account. First, let's quickly address the foundation. The type of IRA you choose is a tax decision, not an investment one. M1 supports all the main types. Roth IRA, my preference, especially if you expect to be in a higher tax bracket in retirement. You pay taxes on the money now, and all the growth and withdrawals in retirement are tax-free. Traditional IRA, better if you expect to be in a lower tax bracket in retirement. Contributions may be tax-deductible now, and you pay income tax when you withdraw the funds later. SEP IRA, great for the self-employed or small business owners, offering much higher contribution limits. For simplicity, I primarily use the Roth IRA strategy, which is what I'll base my Pis on. Pi Strategy 1, the Lazy Broad Market Pi. This is the set it and forget it strategy and the core of my M1 IRA. It's built on the belief that trying to beat the market is a fool's errand, so you just buy the entire market at the lowest cost possible. The Pi Slices. U.S. stock market, 50 to 60%. I use a low-cost ETF like Vanguard Total Stock Market, VTI, or iShares Core S&P 500, IVV/VOO. This gives exposure to thousands of U.S. companies. International stock market, 30 to 40%. I use an ETF like Vanguard Total International Stock ETF, VXUS. This is crucial for diversification, as the U.S. market doesn't always lead the world. Bonds, 0 to 20% for my IRA, because I have a very long time horizon. I currently have 0% bonds. However, for investors closer to retirement or more risk-averse, I'd add a low-cost total bond market ETF like BND. Why M1 shines here? M1's dynamic rebalancing is the killer feature. Say your U.S. stocks go way up and your international stocks lag. When you contribute your next few $100s, M1 automatically directs 100% of that new cash to the underweight international slice to bring it back to your target percentage. You never have to manually buy or sell to keep your allocation balanced. Chart increasing strategy 2, the dividend growth Pi. This is a fun, slightly more hands-on strategy that focuses on maximizing passive income right into your IRA, where those dividends can be tax-free in a Roth account. The Pi Slices. Core dividend ETFs, 50% focus on quality, low-cost ETFs that track companies with a history of increasing their dividends, like Vanguard Dividend Appreciation, VIG, or Schwab U.S. Dividend Equity, SCHD. Individual dividend stocks, 30%. This is where you can use M1's custom Pi feature to pick 5 to 10 blue-chip, dividend-paying companies. Think established names in different sectors like consumer staples, healthcare, and tech. The fractional shares feature is a game-changer here, allowing you to buy tiny, proportional slices of expensive stocks. A broad market hedge, 20%. I keep a small slice of VTI here just to ensure I'm not missing out on growth from non-dividend paying companies. Automation is key. You set your dividends to automatically reinvest, and M1 system ensures those dividends are spread across the entire pie to maintain your target allocations, not just buying more of the stock that paid the dividend. This compounds your wealth passively and efficiently. You're putting it all on autopilot. The final, and perhaps most important, piece of the M1 IRA strategy is automation. Set up Auto Invest, go into your settings and make sure Auto Invest is enabled. Set a minimum cash balance, I use $10, and let M1 automatically invest all cash above that threshold. Schedule recurring transfers, I have a transfer scheduled for the first of every month to ensure I'm consistently adding money. This is the definition of dollar cost averaging. You buy shares regardless of the price, smoothing out market volatility over decades. Review annually. Don't check your portfolio daily. Check it once or twice a year to ensure your original strategy still aligns with your retirement timeline. M1's rebalance button is there if you ever want to reset your portfolio to the target percentages with a single click. If you stick to one of these well-diversified, automated strategies, you are already beating 90% of retail investors. Don't overthink it. Trust the system and the power of compounding. With that said, thanks for watching, and until next time.